Hi, I'm Jim Jubak, and welcome to my YouTube video for Wednesday, August 23. I've got a complaint. August was supposed to be really calm, dull, boring, and it was to give me time to pack up all my stuff because, as I think I've said before, I'm moving to Italy, probably for like 3 to 5 years. We'll continue doing all of this stuff, but from there. So we're packing boxes, we're renting storage space, but August hasn't been calm, and I'm leaving in a week, and it's still pretty chaotic here, so that's my complaint. Okay, today's topic is stay away from China for a while. If you like this video, please give it a thumbs up. Subscribe to my YouTube channel. We're doing about 3 a week. Trying to do always the same day, but not always. If you subscribe, you get notification of when we do our next one, and that's free. If you want more of my free stuff, you can go to my free site. That's jubakpicks.com. Did I mention free? That's got 3 portfolios. Or you can go to my paid site, jubakam.com, and that's got 6 portfolios, including an ETF portfolio and a volatility portfolio. So those links down below. Okay. Stay away from China for now. Why? Okay. If I look at a chart, that'll show you sort of why. So you can see that what we've got is a big peak here and then blah, 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 and a trough here. What's interesting is if you look at what's interesting but also discouraging is to look at what's going on with China. I would say we're looking at a long-term downtrend in the price of Chinese stocks. That so far this year, this index, this ETF is down, what are we down? 8.1% year to date, 2023. It was down almost 23% in 2022, down almost 22% again in 2021. What's going on? Well, China has got a long-term economic and demographic problem, and what you see when you get these spikes in the price of the ETF is the government throwing money at the problem, hoping that this will finally fix it. It's not going to. So you get this big jump. People go, oh, the government has put money in, and we're going to fix all the problems, and then the market goes back down because people say, oh, they didn't fix the problem. They just added a lot of money to the system. The system already has huge debt problems, so this is not a good solution long term. The long-term problem is that China is going through, it would be overstated to say a demographic collapse, but it's pretty pronounced. So China's population fell for the first time since 1961 last year. And the UN projects that China's population will go from 1.4 billion now to about 800 million by the end of the century. And what we're looking for that is fewer couples having children, a big dearth of women in the population because of Chinese basically under the one-child policy, a lot of Chinese families decided that they had to have one child be a male. So we had selective management of pregnancies to reduce the number of girl children. So there's now not enough females for men to marry. So there's those problems. The younger generation is turning out to be really highly educated. This year's graduating class is about 11.6 million college graduates. There are no jobs. And there's a kind of depression about consumption in China right now, as in, hey, we don't think that we should spend money because things are so uncertain. But this is it's not unexpected. China, like Russia and Japan before it, went for an economic industrial policy that was based on high-tech industry and high-tech industrialization and damping consumer spending to provide the capital for that. This model works to a point, But most of the countries that have pursued this have kind of hit a wall because, frankly, damping consumption really means that your economy doesn't grow, and you've got to figure out, well, I'm producing all this stuff because I'm investing in factories. Where's it going to go? For a long time, China just exported it. Well, the world can only take so many things, and now the world is also saying, hey, we'd rather produce at home, at least the United States is. So you're seeing China hit what's called the sort of the middle income economy gap problem that's hit a lot, that hits a lot of industrializing nations. So all this means that right now, the long-term trend is down. Xi Jinping seems to have prioritized stability and political control by the Communist Party above growth. He recently said about the complaints from Chinese young people that there are no jobs. He said, and I find this a really extraordinary quote, he said, eat bitterness. In other words, ratchet down your expectations because, hey, that's what there is, and we're not going to pander to you people and your hopes to have children, as well as the fact that China is one of the world's most expensive places to raise children. The government has not put more money into that. So all these things mean that China, I think, has got a long-term problem, which suggests that you don't want to necessarily just blindly invest and hold for the long term. What you'd really like to do is to find times when you've got a bottom, and the bottom is bad enough so that you're seeing the government provide money,